Welcome to Concrete Block, the podcast where we dive into the latest news and current events shaping our world. I'm your host, Walter. Today, we're tackling a complex and multifaceted story that has significant implications for the global economy and international trade. We're talking about the recent ruling by the U.S. Court of Appeals, which deemed certain tariffs imposed by the Trump administration as illegal. The court's decision has sparked a heated debate about the role of executive power in shaping trade policy and the potential consequences for American businesses and consumers. To break it down, the tariffs in question were imposed by the Trump administration under the guise of reciprocal tariffs, which aim to level the playing field with other countries that have similar tariffs on U.S. goods. However, the court has ruled that this power is vested exclusively with Congress, not the executive branch. Now, President Trump has been vocal about the benefits of these tariffs, claiming they brought in trillions of dollars and haven't caused inflation or other problems for America. But, as we dig deeper, it's clear that the reality is more nuanced. According to Treasury Department data, the U.S. has collected around $142 billion from tariff revenue so far this fiscal year, with about $96 billion of that coming from Trump's tariffs. It's also worth noting that while the tariffs may generate significant revenue for the government, they can have a negative impact on American businesses and consumers. The costs of these tariffs are ultimately borne by U.S. companies, which can lead to higher prices for goods and services. In fact, some economists warn that Trump's tariffs could hike costs through the end of the year and contribute to higher inflation. As we explore this story further, we'll be examining the potential consequences of the court's ruling and what it means for the future of international trade. We'll also be discussing the implications for American businesses and consumers, as well as the potential impact on the global economy. The Trump administration has time to appeal the decision to the Supreme Court, so this story is far from over. And, with the 2024 presidential election looming, the debate around trade policy and tariffs is likely to remain a contentious issue. We'll be right back with more of today's top news on Concrete Block. Welcome back to Concrete Block. We're glad you're still with us as we dive into the latest news and current events. In this segment, we're going to take a closer look at the ongoing feud between President Trump and Maryland Governor Wes Moore. As you may have heard, the two have been exchanging barbs on social media, with Trump resurfacing a controversy over Moore's military record. Specifically, Trump has been questioning Moore's claim of being awarded a Bronze Star, which was reportedly falsely claimed by Moore in a 2006 White House application. Now, Governor Moore has pushed back against these claims, stating that he was recommended for the medal but didn't receive it until last year and that it was an honest mistake to include it on his application. He's also fired back at Trump, calling him President Bone Spurs in a reference to Trump's medical deferment from the Vietnam draft. It's worth noting that Moore has since been awarded the Bronze Star, and he's expressed pride in his military service, including his time in Afghanistan, where he earned a Combat Action Badge. However, the controversy has sparked a wider debate about the accuracy of public figures' claims and the importance of transparency. As we examine this story, it's essential to consider multiple perspectives and avoid taking sides. While Trump's criticism of Moore may be seen as an attempt to discredit him, Moore's response has also raised questions about his own accountability and judgment. Ultimately, this feud highlights the complexities of modern politics, where social media can amplify controversies and personalities can often overshadow policy debates. As we move forward, it will be crucial to separate fact from fiction and to prioritize substance over sensationalism. We'll continue to monitor this story and provide updates as more information becomes available. In the meantime, we want to hear from you. How do you think public figures should handle controversies and criticisms? Should they engage directly with their detractors, or is it better to rise above the noise? Share your thoughts with us on social media using the hashtag #ConcreteBlock, and we might feature them in a future episode. Stay tuned for our final story of the day, right here on Concrete Block. Welcome back to Concrete Block. We're wrapping up today's show with a fascinating story that highlights the current state of personal finance in the United States. As we've been discussing throughout this episode, many Americans are struggling to manage their debt, and some are turning to creative solutions to get back on track. Recently, there's been a surge in homeowners tapping into their home equity to consolidate debt and free up cash. This can be a viable option for those with high-interest credit card debt or other loans, as mortgage rates are generally lower than those of credit cards or personal loans. However, it's essential to approach this strategy with caution and carefully consider the potential risks. On one hand, using home equity to pay off debt can provide significant relief and help individuals get back on their feet. For example, a homeowner with a high-interest credit card balance could save hundreds of dollars per month by consolidating their debt into a lower-interest mortgage or home equity loan. This can be a game-changer for those struggling to make ends meet. On the other hand, it's crucial to address the underlying issues that led to the debt in the first place. If not, there's a risk of falling back into the same patterns and accumulating even more debt. As one financial expert noted, using a home as an ATM to repeatedly pay off debt can create a vicious cycle that's difficult to break. It's also worth considering alternative options, such as home equity lines of credit or home equity loans, which can provide access to cash without refinancing the entire mortgage. These products often come with higher interest rates than first mortgages, but may be more suitable for certain situations. Ultimately, the decision to tap into home equity should be made after careful consideration and consultation with the financial advisor. It's essential to weigh the pros and cons, assess individual circumstances, and develop a long-term plan to manage debt and build financial stability. That's all for today's Concrete Block. Remember to like, share, and subscribe, and until next time, stay informed.